So for today, we'll discuss 83411 for specific audit procedures. So in this topic class, we will apply the concepts of auditing and assurance principles specific to different transaction cycles. Now so we are toward the last few topics in auditing theory, in our review of auditing theory. And what we are going to discuss today will also be a huge part of the topics that are covered under part 2 of auditing topic, which is the auditing practice. So for today, we are going to discuss the following transaction cycles. So we have first introduction sa mga different financial statement cycle, and then we'll discuss in detail the different transaction cycles such as sales and collection cycle, acquisitions and payment cycle, inventory and warehousing cycle, payroll and personnel, and finally, capital acquisition and repayment cycle. Now, these financial statements are just a grouping of related transactions and accounts that follows or parallel the flow of activities of an entity or company. Now, take note that different companies could have different transaction cycles or processes depending on the nature of their business or the size and complexity of their operations. However, for discussion purposes, we will assume that we are auditing a small, a medium to large manufacturing or trading entity that sell a single product. So that we will have a frame of reference for the discussion of the different specific audit procedures so that we will tackle in this topic. So in a typical manufacturing or trading organization, so these are the common cycles or usual transaction cycles that they undertake to run their business. Now, the reason why we have to study these transaction cycles under audit or under auditing, because in practice, auditors divide or segment their audit into smaller parts to make it more manageable and to make performance of audit procedures more efficient. Now, there are different ways on how to segment the audit. So some auditors or some audit team divide the audit work per FS line item. So for example, they will divide the audit work per audit of cash and cash equivalents, audit of receivables, audit of inventory, and so on and so forth. So some audit team naman or some auditors prefer to segment the audit per transaction cycle. So they will group together the accounts and transactions that belong to a particular aspect of the entity's operations. Like for example, those accounts and transactions that belong to the revenue cycle will be audited together. So separate from transactions and balances that belong to purchasing cycle, which will be audited separately naman together. And then later on, they will combine their findings, integrate the results of their audit procedures toward the end of the audit after performing audit procedures in each of those segments. Now, the auditor divide the audit into different segments because there are hosts of benefits and advantages by doing audit this way. So one advantage or one benefit is it results to improve focus and efficiency. So because there's a lot to tackle when we audit the financial statements of our client, it could be overwhelming and it will be difficult to identify where to start in our audit. So that is why if we try to divide the audit into small manageable parts, it will be easier to focus and to tackle a specific or particular issues at hand. Another benefit of segmenting the audit into different cycles is that it results to better risk assessment. So since we parallel the way the company does their operations, we are being able to understand the relationship among the different accounts and among the different transactions. And therefore, we would identify also the risk related to those processes or related to those business operations. Another is that it will result to more effective use of resources. So because the members of the audit team will get what we call this experience or skill in handling a particular aspect, or understanding a particular operation of the client, then on our future audits, we will be able to identify the members of our audit team who are better suited to be assigned in a particular aspect of an audit of a client's financial statements. So we will be able to identify also what level of skill or expertise needed to be assigned in a particular area. And then it can also result to enhanced communication with management because we are able to arrive at better risk assessment. Then we can discuss those risks to the management, like for example, as far as the aspects of their internal control improvements are concerned. So kasi in audit, in real life audit, it's not just about providing opinion. So in most instances, we also try to add value to the management by discussing aspects of their internal control that could be improved, even though that is already beyond our responsibility. So kasi remember in audit, our responsibility is just to express an opinion about the financial statements of our client. However, we could also communicate to management, for example, significant deficiencies or deficiencies in their internal control, and in certain instances that is required. No? There are certain deficiencies in internal control that we are required to communicate to the management and those in charge with governance. Like for example, significant deficiencies and material weaknesses. And if we do perform our audit in terms of FS cycle, then we are able to identify easier and better those type of weaknesses or deficiencies in our client's internal control. And then finally, it could result to better compliance with auditing standards since auditing standards require us to obtain an understanding of the business of our client for us to be able to identify and assess the risk of material misstatement. So therefore, if we segment our audit into different transaction cycles and understand the different aspect of the operations of our client, then it will result to, as we mentioned earlier, better risk assessment and compliance with the standard. So since the standard requires us to assess the risk of material misstatement of our client on both the FS level and assertions level. So as we mentioned, we are going to discuss the different FS cycle that are typically present in a medium to large manufacturing or trading company. Now, in practice, the financial statement cycle does not have a definite beginning or end. So usually, the beginning of the transaction cycle begins once the entity started with their business and ends lang upon the cessation or stoppage of their business operation. Okay, but while the business is going concern, operating, the cycle just goes on and on. So the very start of the cycle starts when the company raise capital from owners and creditors. So that is included in the capital acquisition and repayment cycle, also known as the financing cycle. So in the financing cycle, the entity will raise cash from stockholders in the form of equity and cash from creditors in the form of debt naman. And then those cash will be used to acquire, for example, operating assets such as property, plant, and equipment. So that is part naman of what we call the acquisition and payment cycle. So once the entity has operating assets such as PPE, property, plant, and equipment, so they will procure raw materials to produce a product. So that is also part of the acquisition and payment cycle. In fact, the bulk of the acquisition and payment cycle would be the acquisition of goods and services needed to manufacture the product that the company will sell. So usually that would be the raw materials, the services like indirect labor, and other goods and services such as prepayments, intangible asset, and other assets that the entity may need to produce a product or operate their business. Okay? Now, this acquisition and payment cycle in some references is also called as the purchasing cycle. Now, however, this is not enough. For example, the company has raw materials. It should be converted into finished product. So that is why they need labor. So that is why we have another separate cycle called the payroll and personnel cycle. So yung payroll and personnel cycle naman involves hiring employees, hiring workers to produce yung product coming from the raw materials, using the PPE, manufacture the product of the entity. In a way, the payroll and personnel cycle is very similar to acquisition and payment cycle because it also involves acquiring services and payment for those services. So however, unlike in the purchasing cycle, the provider of services in payroll and personnel are internal to the entity. So who happen to be the company's employees, which present unique risks and activities and controls. That is why it warrants a separate discussion as a separate cycle. Now, the company has now materials, labor, and overhead. So overhead in the form of indirect materials and indirect labor. Now they are ready to produce the goods. So that's where inventory and warehousing cycle comes in. Also known as the conversion cycle. So in the conversion cycle or inventory and warehousing, the company will produce or assemble the goods for sale to their customer. So after the conversion cycle or the inventory and warehousing cycle, the company will sell the finished good to the customers. Then come the sales and collection cycle, also known as the revenue cycle. So in the revenue cycle, what happens is that the company sells the good to the customer, ships the good to the customer, bill the customer, and collect the cash from the customer. So once the company collected the cash, it will go back to the general cash of the entity, and that cash will be used to repay the creditors, repay the principal and interest of the debt, and to the owners naman in the form of dividends. But not all cash collected will be used to repay the owners and creditors, huge portion of which will be used to acquire again what? Goods and services to restart the process again. Okay? So this is a typical transaction cycle for a large or medium manufacturing or trading entity. So the difference lang if trading, they do not convert the goods anymore. So ang process lang involved is warehousing. So after warehousing, so they just sell it to the customer as is or with little modification. So let's start to discuss the first one. So we will discuss first sales and collection cycle. So again, yung sales and collection, this is also known as the revenue cycle. Now before we talk about the relevant audit procedures, we have to understand first the different business functions and documents as well as the classes of transactions and account balances involved in each cycle. So because we cannot appreciate the purpose of the audit procedure if we do not understand first how the cycle or how the transaction cycle work for the company. Now in auditing the sales and collection or the revenue cycle, there are 5 classes of transactions involved. So yung 5 classes of include number 1, sales transaction. Another, we have cash receipts transaction. Third is sales returns and allowances transaction. Fourth is write-off of uncollectible accounts. And last, estimation of bad debts. Now class, for most companies, we usually tag the first 2 as significant class of transaction. So what do we mean by significant class of transaction? Significant class of transaction are classes of transaction where we expect or there is a higher potential for material misstatements. So because of the volume of transactions involved and complexity of transactions involved in the sales and cash receipts transaction, they are often tagged as significant class of transaction. Yung third one, the sales returns and allowances, typically this is regarded as immaterial or not material in most audits. But if the auditor believes that sales returns and allowances are material to an entity, then this could also be tagged as a significant class of transaction depending on the assessment of the auditor. Now the last 2, write-off of uncollectible accounts and estimation of bad debts, could also depend on the client or the nature and industry of the client. For some client, for example, for companies that make bulk of their sales or revenue on credit, then these last two may also be considered as a significant class of transaction where material misstatements could also occur. But for some entities, for example, who make their sales almost on cash basis, then this last two transaction would not be considered as a significant class of transaction since they do not have or they have little credit sales only. Now let us discuss the different business function in the cycle. Okay? So earlier we discussed the 5 classes of transaction. Now we'll discuss the business functions. The first 4 business functions in the sales and collection cycle belong to the first class of transaction, which is the sales process. Now the first step in the sales and collection cycle is when the customer order for the good or product of the entity. So, ang nag-trigger class sa revenue cycle is the customer order. So, yung order ni customer, it can come into different channels. So, customers can walk in to the store of the client. So, they can call and order via telephone. Okay, they can also order via e-commerce platform na entity, no? So pupunta sa website na entity and doon mag-order ng goods or ng product, okay? And for institutional customers would often send PO. So what is PO? Purchase orders to the client, no? To instruct the client to deliver goods or product to that particular institutional customer, okay? And nowadays, no, prevalent na nga rin. So hindi na lang sa mga formal channels, no? Even in social media like Facebook or TikTok, pwede na mag-place ng orders, right? Okay? Pati sa mga Shopee or Lazada stores, pwede na rin mag-place ng orders. Now, however, since different yung mga format ng mga customers' order, some are orally, some are supported by documents such as PO from customer, there is a need to standardize the format to capture the information about the order of the customer. So that is why what happens is that the company, in particular, the sales department, will transfer the information from the customer order to a document called the sales order. So yung sales order kasi class, standardized yung form niya and the information needed to capture the order of the customer for it to be processed by the entity. So once the customer order is reduced to sales order, so it will now be transferred to the credit department for approval. So especially if it is on credit. So the relevant department, so if earlier we talk about sales department, so this time the relevant department would be the credit department. So credit or the profit department will decide whether to approve or not to approve a credit sale to a customer. Often, in some companies, this will be done electronically by comparing the credit limit of the customer against the value of the upcoming order plus the outstanding balance of the customer. So, kung yung upcoming order is below, no, doon sa outstanding balance ni customer and the credit limit, so then the credit will be granted. So, usually yung indication ng credit approval, it could be electronically or kung manual, it would be indicated in the sales order itself. So yung output nitong business function na to would be the approved sales order. So once there is already an approved sales order, it will now be forwarded to the shipping department naman. So the shipping department will pack the goods, prepare a packing slip, prepare shipping documents such as delivery receipt or bill of lading, and send the goods or product to the customer. Now, this is a critical part of the process because this is at this time that the company departs an item of value from their premises, which is the inventory. So, since this is a critical point of the process, adequate controls should be present before any goods are shipped to the customer. Like, for example, verifying first whether credit has been approved before shipping to the customer, and also ascertaining the correctness of the items based on sales order before shipping the goods to the customer. Now, once the goods are shipped to the customer, the next step is to bill the customer. So in billing the customer, the relevant department naman this time is the billing department. So normally for smaller companies, so the billing department is also being handled by the accounting department. So for larger companies, there would be a separate billing department that would also be under the accounting department or the finance department. So in billing the customer, the billing department will generate what we call a sales invoice. So yung sales invoice, it will be sent to the customer, not to bill that customer for the product shipped to them. And upon generating the sales invoice, it will also generate an entry to the sales book or in the sales journal. And that is also the basis of the recording of the sales. So whatever date the sales invoice is entered into the sales journal or sales book, that is also the date or the period when the sale is recorded. Okay? And also, the entry in the sales journal will update both the AR subsidiary ledger and the AR general ledger. So it will increase the balance in the AR subsidiary ledger and the AR general ledger. So we'll discuss that later, yung mga difference ng mga documents. So after billing the customer, the next step is to process and record cash receipt. So enter our second class of transaction. So the second class of transaction is collecting cash from customers. Kasi remember, this first four transaction or business function belong to the first class of transaction, so which is the sales process. So this one naman belong to cash collection process. So in this case, the relevant document would be the remittance advice coming from the customer. So if the customer did not return a remittance advice, usually the one who collects the check or open the mail will prepare one. And also, the person responsible for collecting cash, who is often the cash receipts department, will also prepare a pre-listing of cash receipts. Now, yung pre-listing, it is a document being prepared by someone who does not have an official responsibility to record cash receipts. So kasi the one who is responsible to record would be the accounting department. So yung pre-listing, it will be used to compare with other documents such as the deposit slip to verify the accuracy of cash collection. And then also the company will issue official receipt to the customer normally. So after receiving cash from that customer, another document that is being used. And then yung information about the cash receipt will be it will generate rather an entry to the cash receipts journal naman or cash receipts book, which will also be used to update the AR subsidiary ledger and the AR general ledger. Pero this time, the effect would be to decrease. So the effect of cash collection would be to decrease both the AR subsidiary and general ledger. So the next business function is processing and recording sales returns and allowances. So which is part naman class of the sales returns and allowances class of transaction. So this time the relevant document would be a credit memo. So yung credit memo, the format is similar to the sales invoice. However, if the sales invoice or the difference is that it supports for the reduction naman of the AR rather than increase in AR. So kasi yung sales invoice earlier, it will result into the increase of the AR of the customer. So while the credit memo naman will support the decrease naman of AR from customer. And then of course, there should be a receiving report. Receiving report, once the goods are received by the receiving department coming from the customer as a result of the return. But as we said earlier, so this often constitute a material amount of transaction within a company's process. The next we have write-off of accounts receivable. So write-off of accounts receivable happen when the entity deems it that the amount collectible from the customer cannot be collected or recovered anymore. But there should be a strict procedure or process so before the entity decides not to write off an accounts receivable. So there should be an authorized personnel or officer who should authorize the write-off of receivable before recording the actual write-off. So usually may ginagamit yan ng mga authorization form to determine whether an account is really needed to be written off. So kasi class, ano rin siya, fraud risk factor in this cycle. So because the write-off of uncollectible accounts receivable constitute a credit to the ER. It can be an avenue to commit fraud. Kasi like for example, if a personnel embezzle cash collection from customer, so he or she can conceal the shortage by effecting or entering an unauthorized write-off. Okay, kasi pag collection, ano ang credit sa collection? Diba, AR din? So, debit cash, credit AR. But the problem is, itong si personnel, minisappropriate niya na yung cash. So, wala na siyang madedebit na cash. Pero kailangan niya pa rin bawasan yung AR ultimately. So, pwede niyang i-conceal yung shortage by crediting AR by write-off instead. So, credit AR, debit allowance. So, yung cash, he or she will keep it for himself or herself na. So that is why yung write-off ng AR should be properly authorized to prevent those type of fraudulent scheme. And then finally, so the last one is estimating the bad debts or providing for bad debts. So this one naman should be done in accordance with the accounting standards, which is basically PFRS 9, and should be consistent with the practice of the entity in prior periods. So this one is based on accounting policy, consistent with accounting standard, and past practice. No, dapat consistent yung application. So kung ginagamit ni client, let's say is percentage of ending AR in the prior years, gano'n din dapat in the current year. Kung percentage of credit sales, gano'n din dapat. So until magbago fundamentally yung business na entity, ay magkaroon ng change in accounting policy.